Welcome to Market Brief After Hours. We have a massive show lined up for you today. Wall Street just wrapped up a historic session, with the Dow Jones Industrial Average crossing a major psychological milestone powered by its newest member. Meanwhile, global markets are reacting to a mix of geopolitical shifts, economic data, and some eye-opening consumer debt numbers. Let's dive straight into the big story of the day. The Dow closed above 52,000 for the very first time. What was driving this incredible rally?
It was an absolute milestone of a day. The Dow advanced 307 points, or 0.59%, to close at a record 52,183. But it wasn't just the Dow. We saw a broader market rally across the board. The S&P 500 gained 1.18% to close at 7440, while the tech-heavy Nasdaq composite surged 2.70% to end at 25,820. The real catalyst for the Dow's historic run was Alphabet. It made its official debut as a Dow member today and climbed nearly 5% on its first day of trading in the index.
That is a spectacular entrance for Alphabet. But they weren't the only ones making big waves in the U.S. markets today, were they?
Not at all. Comcast shares rallied 4.4% after the company announced plans to spin off its media and tech businesses into two separate publicly traded companies. That separation is expected to take about a year. We also saw a massive turnaround in semiconductors. The VanEck Semiconductor ETF, or SMH, gained more than 3%, reversing an earlier decline. This turnaround was led by Astera Labs, which jumped roughly 16%, KLA up about 12%, and Applied Materials, which rose almost 11%.
It's fascinating to see that kind of momentum, especially since we are heading into a shortened trading week with the Independence Day holiday on Friday. How does the holiday affect market behavior?
It introduces a couple of interesting dynamics. First, we have lower liquidity, which can lead to larger, more exaggerated market moves. Second, we are approaching the end of the quarter. Portfolio managers often engage in what we call window dressing around this time. They want their quarterly statements to look highly attractive to clients, so they lock in gains on big names that have performed well throughout the year.
That makes a lot of sense. Now, looking beyond the corporate news, there was a major geopolitical development over the weekend that seemed to soothe some market anxiety, specifically regarding the U.S. and Iran. What happened there?
It was a tense weekend of military exchanges, including U.S. retaliatory strikes on Iranian missile and drone storage locations and coastal radar sites. Crude prices rose as traders assessed if the U.S.-Iran ceasefire will hold. International Brent crude climbed 1.6% to settle at $73.15 per barrel, while West Texas Intermediate futures advanced 2.2% to settle at $70.75.
It's a fragile piece, but definitely one the markets are watching closely. On the flip side of this optimism, there was a pretty alarming piece of domestic economic data regarding consumer debt. Can you walk us through that?
This is a major red flag that investors shouldn't ignore. U.S. credit card accounts delinquent by 90 days or more have jumped to 13.1%. That is the highest level we've seen in 15 years, and it is rapidly closing in on the highest level in history. It suggests that despite the stock market highs, the average consumer is feeling a massive squeeze from inflation and high interest rates.
That is a stark contrast to the stock market highs. Let's take a quick break to hear from our sponsor, and when we return, we will look at how global markets in Europe and Asia are holding up and break down the latest technicals in Forex and commodities. Stay with us. Welcome back to Market Brief After Hours. Before the break, we discussed the record-breaking session on Wall Street. Now let's turn our attention across the Atlantic. Major European markets closed slightly lower today. What was behind the cautious mood in Europe?
Europe is really grappling with persistent inflation concerns and the prospect of central banks keeping interest rates higher for longer. The pan-European Stoxx 600 edged up just 0.04%, but the major regional indices were in the red. The UK's FTSE 100 fell 0.23%, Germany's DAX dropped 0.18%, and France's CAC 40 shed 0.21%.
I understand there was also some weak housing data out of the UK.
Yes, net mortgage approvals for UK house purchases fell sharply to 56,205 in May. That is down from over 66,000 in April, coming in well below market expectations. It's the lowest level since December 2023. Rising mortgage rates and weakened consumer confidence, which was unfortunately exacerbated by the conflict with Iran, have really dampened buyer demand. On a brighter note for Europe, Eurozone bank lending to the private sector grew by 3.9% year-over-year in May, and overall economic confidence in the Eurozone improved more than expected in June, rising to 95.0. Spain also saw a nice boost, with retail sales rising 1.3% in May, led by spending on household equipment and food.
So, a bit of a mixed bag in Europe. What about Asia? It seemed like Asian shares managed to shrug off some of those interest rate worries to end mostly higher.
They did. In Japan, the Nikkei 225 edged up 0.15% to close at 69,468. Nintendo was a big story there, rising over 5% after announcing they are evaluating a stock split to make their shares more accessible to retail investors. Japan's retail sales also beat expectations, surging 5.3% year-over-year in May, which is the strongest rise we've seen since late last year.
And what about China? I saw there were some escalating trade tensions reported.
Indeed, the Shanghai Composite climbed 1.16% to 4,073. But underneath that, the Chinese government blacklisted 4 Japanese defense research institutes and placed tighter export controls on dozens of other Japanese entities. They are actively trying to limit Tokyo's access to Chinese-origin dual-use goods. Meanwhile, in Hong Kong, the Hang Seng Index rose 1.57% to 23,026. Baidu jumped over 5.5% on reports that its AI chip unit, Kunlun Sin, is targeting a Hong Kong IPO that could value the unit at a staggering $50 billion.
That's a massive valuation. What about South Korea and Australia?
South Korea's KOSPI 100 actually bucked the positive trend, falling about 1%. Samsung Electronics lost nearly 4.9% as investors took profits on crowded AI and semiconductor trades. However, there are expectations of major upcoming investment announcements from Samsung and SK Group, which could provide strong long-term structural support. Down under, Australia's S&P ASX 200 rose 0.68% to 8,823. Neuren Pharmaceuticals was the star of the show there, surging over 36% after its drug Dabu was recommended for approval in the European Union.
A 36% jump is incredible. Let's transition to the currency markets now. Forex has seen some very distinct trends lately. Let's start with the euro and the pound.
Both currencies managed a decent rebound today, though they are still locked in broader bearish trends. The euro USD closed up 0.37% at 1.1426. While we saw some short covering today, the pair is trading well below its key moving averages. The 50-day simple moving average is at 1.1612, the 100-day is at 1.1641, and the 200-day is at 1.1660. So the medium-term bias remains firmly bearish unless it can break back above the 1.1450 resistance level.
And how is the British pound looking against the greenback?
Very similar story. GBP USD closed up 0.49% at 1.3261, closing right near its daily high. But just like the euro, it's trading significantly below its moving averages. The 50-day is at 1.3424, the 100-day is at 1.3423, and the 200-day is at 1.3402. The structure turned bearish back in early June, so this looks like a technical pullback or relief rally. If it fails to hold above 1.3191, we could see a retest of the 1.3150 level.
On the flip side, the US dollar has been incredibly dominant against the Japanese yen.
Unstoppable, really. USD JPY closed up 0.15% at 161.93. It's grinding higher in a very established uptrend, sitting way above its 50-day SMA of 159.43, its 100-day of 158.53, and its 200-day of 156.43. The psychological 162.00 mark is the immediate target. As long as it holds above 161.70, the upward pressure remains.
What about the Swiss franc?
The USD CHF pulled back slightly today, closing down 0.21% at 0.8073. But this looks like temporary buyer exhaustion after a massive run from the 0.7800 level in late May. The broader trend is still very bullish, with the price comfortably above the 50-day SMA of 0.7902 and the 200-day of 0.7908.
Let's look at precious metals now, because gold and silver have been taking a beating lately.
It has been a brutal sell-off. Gold fell 1.83% today to close at $4,014, testing that critical psychological floor of $4,000. To put this decline in perspective, gold is trading deep below its 50-day SMA of $4,471 and its 200-day of $4,454. We've seen a consistent pattern of lower highs and lower lows since February, and if $4,000 breaks, we could see further liquidation. Silver followed a similar path, dropping 1.59% to close at $58.20. It's trading way below its 200-day SMA of $68.68, confirming a deeply entrenched downward trajectory.
Unbelievable moves in metals. To wrap things up, let's look at some individual stock stories that caught your eye today. Who were the major market movers?
We had some massive corporate news today. First, Rocket Lab announced it is acquiring Iridium Communications. This is a huge deal because it combines Rocket Lab's launch capabilities with Iridium's satellite communications network. Investors loved it. Rocket Lab stock jumped near 16%, and Iridium surged more than 25%.
That is a true power move in the space sector. What else?
Roblox was upgraded to a buy from neutral by Arete Research Services with a price target of $95, which sent the stock up over 14%. We also saw Charter Communications close up more than 9%, following reports that they are in talks to partner with SpaceX on a consumer phone offering. On the downside, Copart fell over 8% after announcing their CEO, Jeff Law, will step down at the end of July. And finally, Verizon dropped more than 5% after forecasting a loss of $700 million to $800 million in the second quarter, following a joint venture deal with BT Group.
That is all for today's episode of Market Brief After Hours. We've covered everything from the historic Dow milestone to the technical levels in currency and metals. If you find this useful, please follow Market Brief After Hours. We will see you next time.